This is Jim Emter, Ahn Co, Alexandria, Minnesota, with your closing grain and livestock comments for June 26, 2020. Corn market today down a quarter to down 2 3/4 in the new crop. Soybeans down 4 1/4 to 7. Chicago wheat down 12 3/4. Minneapolis down 12 1/2, and Kansas City down 8 1/2. On the week, corn market down 15 1/2. So what took about 3 weeks to rally was taken away in a matter of about 3 days. The old up on the escalator, down on the elevator rings true to that market. Soybeans down 11 1/2. Chicago wheat down 7 1/4. Minneapolis down 25 3/4 on the week. Kansas City wheat down 7. Looking back to the week, it all kind of started late Monday night. One of President Trump's colleagues came in here and said that basically the trade deal was off. 2 hours later recanted that statement. A few hours later after that, President Trump came out and said the phase one's still on, but the damage had kind of already been done. We've got negative technical action. Couple that with the weather forecast in the 5-day, 6 to 10, and 8 to 14 day that throughout the week has put greater moisture chances on through the heart of the Corn Belt and warmer temperatures, and we've been in a risk-off environment ever since. So what's the real measures for next week? Crop report Tuesday, stocks, acres, that'll be of the major focus there. Really set the tone. Obviously, weather of equal importance. You know, we see some seasonal tendencies that the markets try to rally here from about July 1st to July 10th, but that's really going to be dictative of the weather trends, so we'll watch that very closely here as we work ahead. Over in Minneapolis wheat, even though North Dakota is frying up and losing barley and spring wheat crop, the wheat market really took it on the chin with outlooks upwards of 2 inches of rain into next week. So we'll see how that all pans out and reevaluate into next week. Negative technical action will kind of break down the charts towards the lower end of the range again for at least corn. Minneapolis wheat into new lows here again, so just kind of a risk-off circumstance once again, and another failure miss as the markets try to break up to the top side. Live cattle up 52 1/2 to down 47. Feeder cattle down 65, hog market down 165 to 320. Very negative hog and pig report yesterday, weighted in the market today. On the weekly, hogs down 317 1/2, feeders pretty much steady, lives pretty much steady as well. So as we look to next week, really kind of the undertone on the weekly feeders technically finished up 0.05, so point of clarification there, but all but steady on the week. Live cattle continue to see good exports. Good, cash sales have faltered here. We're seeing that fade down in the overall price, but we're just kind of stuck in a rut here for feeders and lives, hogs into new lows, and it should be a very wild week again next week. This has been Jim Emter, Ahn Co, Alexandria, Minnesota. Traded in futures and options involves risk of loss. It is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation. Have a great afternoon.